All right, well, good afternoon, everyone, and welcome to today's discussion on scaling fintech platforms, challenges, and opportunities. My name is John Stona, and I lead marketing for Stripe here across Asia Pacific. And I hope many of you are already Stripe users or at least know what we do. If not, what we do is essentially build economic infrastructure for the internet. We try and make it as seamless as possible for any business, no matter startups to Fortune 500 companies, to manage their payments online and grow their businesses globally, effectively online as well. We also work with a number of merchants and businesses in the fintech space, large companies like Visa, but also private companies like CardUp and iPayMy who are doing really innovative and cutting edge endeavors in this space. It's no secret that fintech as a sector has been certainly one of the most talked about ones, particularly here in Asia, and also if you go and zone in even more in Southeast Asia. And it's not surprising, it is a vibrant space. It's a multifaceted space spanning everything from how we rethink traditional banking to how we give more liquidity to merchants and consumers alike. There's a lot going on in the space. It can be a somewhat complex space on the surface, but it's definitely a rich space, and it's very difficult for anyone to get bored, particularly in a region so diverse as Southeast Asia. And so today we're going to dive in headfirst into fintech and fintech platforms, and I am delighted to be joined by some of the leading thinkers, entrepreneurs, experts in that space, Stuart, Tessa, and Aki. And so to kick things off, what we're going to do is we're going to have a bit of a probably discussion, so 40 minutes or so, but we are going to open it up for live Q&A in the end. And so throughout the entire conversation, as and when you have questions, feel free to just pop them in the Zoom chat box, and we'll make sure, at the end, we'll look through all those questions and get around to the ones which are the most popular and relevant to the discussion. So with that said, why don't we dive right in, and I'm going to ask each of the panelists to just give a quick introduction on themselves, their companies, and to have things be a little bit more personal and engaging. What's one hobby that you've picked up, one interesting hobby you picked up over the past year or so? I know a lot of folks have taken up sourdough bread making, or basket weaving, or you name it, right? So a little bit about yourselves, your companies, and interesting hobby. Why don't we start with Tessa?
Right, thanks, John, for that introduction. So let me talk about Zendit first, with a brief introduction about myself, then I'll deep dive into the hobby because I think that might be a lot more exciting for other people. No. So yeah, a little bit about Zendit. We're a payment player. We do a lot of payment infrastructure in Southeast Asia. We're a B2B player, very similar to Stripe. So we provide payments for businesses who want to transact online. So we help everybody accept payments through things like credit cards, bank account transfers and the likes. We also help people make payment. So anybody who's doing commerce online can come to our platform, and we can help you do payments seamlessly. So that's a little bit about Zendit. Myself, I'm one of the co-founders. I'm Indonesian, started out in investment banking, and now, deep into the fintech space and Southeast Asia itself. For the fun part on the hobbies, well, I guess I've always loved surfing. During the pandemic, work from home, being outdoors is kind of a nice thing to do. So I've kind of been doing that a little bit because I've parked myself in Bali and just kind of holed up in my villa during the pandemic. Yeah, back to you.
Excellent. Welcome to today's chat, Tessa. Aki, over to you.
Hi guys, my name is Zaki. I'm the co-founder of two startups in Singapore. One is a B2B fintech called Bamboo, which is going to be the focus today, and the other is a B2C health tech called Healthzilla. Bamboo itself builds robo-advisors, if you know what that is, basically like a digital financial planning, digital wealth management. And we do that as a B2B model. So we basically build and sell this kind of software to banks and wealth managers like Franklin Templeton, Standard Chartered Bank, BCA in Indonesia, all sorts globally. And we're now up to 70 people across Singapore, London, and the US. And personally then, during the pandemic, I've really doubled down on meditation. So I used to do around 10 minutes, sort of regularly, call it like 4 or 5 times a week. And I've now gone to 40 plus minutes every day. So I think it's been a huge thing for me.
Excellent. Welcome. And last but not least, Stuart, over to you.
Hey, John. Thank you. First and foremost, I think I wish I was stuck in Bali. I think Tessa's definitely got an advantage over all of us. So I think that would be great. But seriously, my name's Stuart. I'm the CEO, co-founder of Hula. I'm originally from the UK. I spent time living in Europe and Australia. I've been in Singapore for about 12 years now, actually, in total. Very much my sort of home. Spent a large time of my career in telco and moved into the payments industry, perhaps a little bit like sort of Tessa, and have sort of thoroughly enjoyed, I think, moving into this space, and sort of joined, I think, when it just started to become fintech and perhaps a little bit cool as well, which was good for me. We've had a sort of a tremendous journey, I think, over the last sort of three or 4 years. From a Hula perspective. We've sort of, the ideation started about 2 years, but we in 2016, about 4 years ago rather, and we launched in the beginning of 2018, and it's been an incredibly exciting journey, and creating, I think, one of Asia's, if not Asia's, first buy now pay later platform across the region has been incredibly exciting, but more so, I think, delivering on to solving some of those critical problems that merchants tend to face. From a marketing perspective, which tends to be, creating or driving new customers, getting them to convert, getting them to increase the basket size of what they're spending, but also driving them to come back, and that sort of loyalty play. But I think the biggest angle to that is how we sort of tackled this from a responsible affordability play. So perhaps aggressively challenging some of the norms around the perceptions of this space and doing it right. Especially for the Asia region. And finally, I think the hobby, sad to say perhaps, but I think I probably worked out how to spend even more time working, and the ability to sort of flip from one meeting on Zoom to mobile to sort of Google Meet almost seamlessly, and trying to remember which pair of headphones I need to be wearing. I think that's probably the hobby that I picked up in the last 12 months.
Excellent. Well, welcome, Stuart. Don't work too much. If you again need some time on the beach with Tessa, she's here, and of course Aki can also help with the mindfulness and meditation, right?
Absolutely, yeah.
Great. Well, again, welcome, folks. Great to have you on board for today's discussion, and really fantastic to see such diverse perspectives across the entire sector. I think, Stuart, in your entry, you touched on a couple salient points. I think the need to really identify critical problems for merchants and to essentially build the right kind of solutions and products. And I want to start off today's discussion really focused on that identifying gaps on product side. It's an area which I think at Stripe we obsess about. It's a big reason that we're building this global payments and treasury network to help solve problems for fintechs. What we've also found, though, is really the need to be local, particularly in a region like Southeast Asia. And we set up a product and engineering hub in Singapore to build for the region and to export local learnings globally. So when we think about how you all build your products and services, tell us a little bit about how you started on that journey to kind of building your companies and your products. But part of that is, how did you identify the gaps in the market and kind of make sure that you were tackling something that really was a gap? So I guess, why don't we start with you, Stuart?
Yeah, sure. Absolutely. A super question. I think that, from my perspective, this is, goes back to, being in WorldPay, as I sort of said, four and a bit years ago now. We first started to hear a lot of pain, I think, from merchants. How can you help me reduce cart abandonment? How can you increase conversion? You're a payments company. Surely you can sort of help me do that. And in reality, yes, there was definitely a lot of things that we could do in that sort of context. But I think in terms of providing the sort of more marketing outcomes that I alluded to earlier on, there was sort of some pretty cool businesses starting to grow quite quickly, like Klarna in Europe and Afterpay in Australia. And I think in terms of providing, sort of something, incredibly valuable from that perspective, that was really the sort of starting point of, understanding the demand, the pain points, that were there, but also then how we could sort of solve that, those problems, for merchants. And, definitely, I think the outcomes that these two companies and how they were going about it, albeit so slightly differently, were sort of solving that. So that was really the light bulb moment, I think. But I think you kind of alluded to a really critical word for Asia as well, that we we realized too that localization is absolutely vital. And I think that was probably the sort of third part of the challenge. You look at Europe, it's reasonably easy to sort of go and move across Europe. At least it was perhaps into recent times, but that's a different conversation. But I think for us, it was critical that we design a technology platform that allows us to be, so somewhat global in mindset and structure, but also ability to localize our product. And that's effectively, what we've done as well to sort of solve that Asia challenge. And again, being able to deliver that buy now, pay later capability, which involves, perhaps different products, different models, different, definitely different risk algorithms, different currencies, different languages. And that was really the sort of big challenge, I think, that we needed to overcome, to bring, again, the demand and the supply, together to create a business and solution.
Excellent, makes a lot of sense. And I certainly take your point, particularly around APAC vis-a-vis Europe and North America as well, just how diverse and non-homogeneous this region in particular is. Tessa, how about you and Zendit?
Yeah, so Zendit actually started in 2015 as a peer-to-peer wallet in Indonesia. And that was really where we figured out actually how payments is really, really fragmented in the country, right? When you're seeing all these other wallets, especially in the developed market, it's so seamless, it's so easy. You can put in your bank account, you can pull funds super easily from one wallet to another. We realized that in Indonesia, hey, payments is super duper complex. So what we found was that during that time where we were a wallet, our friends who were starting new startups were going, hey, how are you guys able to do this so seamlessly? How can you transfer money so quickly, instantly from one bank account to another, for example? And that was how we said, okay, there's actually demand there, demand not from consumers, but from other businesses, right? For us, it was also really the right timing. The likes of, Stuart's company, a lot of fintech were kind of coming into Indonesia, especially a lot of these, peer-to-peer lenders, right? So again, they wanted a standard that was more acceptable globally. And we said, all right, why don't we bring this tech that we've built for the wallet, but we're going to build it for B2B. And that's how Zendit, the payment gateway, came about.
Excellent, excellent. Thank you for sharing. And of course, Aki.
Sure. So we started in 2016, but there was this period a few years before, maybe starting in 2014, when really the robo-advisors in America had broken through, and they were kind of making fintech headlines as the next big thing, and how it was going to disrupt, the banking channel and how wealth products were distributed. So there's a lot of hype around it. And at the time I was doing consulting work with the banks and insurance companies, and they were evaluating this opportunity. And they wanted to find a platform rather than build it or have, consultants build it for them. So this was the first time I really considered it like basically creating a product for a need. And then I happened to just coincidentally meet my co-founder, Ned, who I didn't know at the time. And we met kind of within the fintech community, and he came from a finance background, and he saw the same opportunity. So we ended up just putting our heads together and jumping on it, and yeah, not looking back. It's pretty simple.
Excellent. So, I mean, I think the folks that are dialed into today's call today's call certainly, want some practical advice. Would love to hear some real world stories. And so, if we have again some real talk in terms of building a company, what's it really been like, building a fintech company in Southeast Asia? I mean, what have some of your biggest challenges been? I mean, for us, we work with a lot. Merchants, they talk to us about regulations being so complex and they need to simplify it. We hear a lot about hiring as well. How do you infuse the right culture throughout your organization? Everything from the people you hire to the APIs that they build. I mean, again, we think a lot about that at Stripe. So I guess, Aki, off the bat, what's been the most challenging part about building your company in the region?
I think there's been many interesting challenges, but I think as a sort of general rule for Southeast Asia in particular, I think it's like there's certain models which work really well in large markets like the US or China, where you have sort of homogeneous regulatory environments, and you have large kind of domestic consumer markets and enterprise markets or SME markets, whatever you're going after. But I think the challenge here is, it's very heterogeneous. So different regulations. And so I think it's like you have to find a business model which factors that in, which assumes that irregularity. So either you have to, a lot of people now are starting fintechs in Indonesia, for example, because it is a large growing domestic market, and you now have the sort of capital behind it. So I think it's just kind of finding that niche is the challenge. And I think a lot of it still is around managing the funding aspect. And, we've had several brushes with running out at various points in the last 5 years. And it's still not as easy, I would say, anywhere here in Asia as it is in say, the US. So we're still kind of behind on that, and having that steady access, because I think all the other problems ultimately, there's the old saying that there aren't many problems that money doesn't solve, and I think that applies in startups. Like, it's easier to build a good culture if you can afford to hire the best people and have a nice office, et cetera, right? If you're having to make do with like what you can scrounge together, it's pretty hard to kind of get a good vibe going, et cetera. And, you can't afford to hire, HR people and all that. So as soon as you get either revenue and or funding, I think it just solves a lot of problems. And of course, the more revenue you get, the easier it is to get funding. The more funding you get, the more sort of media hype and et cetera, it's easier to get clients as well. So there's kind of this virtuous positive feedback loop that you need to somehow jumpstart. But I think it ultimately kind of boils down to the funding aspect, I would say.
Right. So the funding aspect, but something that you said at the start, though, around essentially making sure your business model is tooled to handle irregularity, I think is also quite a salient point, which sometimes folks miss and is so critical to their longevity and growth.
Yeah, and by the way, I'll just add, I think that's why it's been generally quite challenging for successful companies from Europe and the US in terms of fintech to sort of parachute into Southeast Asia, because I think this is the aspect which they don't quite appreciate, is like, hold on, like, I can't go to Thailand, Malaysia, Vietnam, and Singapore. I need to go one by one.
Been there, Aki, definitely. Completely
exactly. And I suppose, Tessa, I mean, as someone who's essentially invested in companies all throughout her life in APAC, building a company from within Indonesia, I imagine a lot of what Aki said kind of resonates with you, but anything to add or different points?
Oh, definitely. I think it's been, a lot of investors, it's a very sexy story. Let's go to Southeast Asia. The macro numbers, kind of show. But when you really deep dive, hey, every single market is different, right? If you're coming to somewhere like Indonesia, payments all about bank transfers, and now wallets up and coming, right? But we start out with a lot of cash payments in the beginning. Go to the Philippines and everyone still needs to go to the bank and write a check or put in a pay slip into your counter to make payments, right? So again, markedly different profiles there. For me, I think some really, when we first started out as Zendit, it was really early stage for the startup scene. Nobody even knew what Y Combinator was, for example, right? That was not a selling point. So I think some fun stories from the beginning, right? When Moses, the CEO, the other co-founder, and myself would go to banks, they're like, who are these crazy young kids promising to bring millions of dollars to the banks? And it was one of the hardest things was knocking to all these, bigger players and saying, hey, we're going to try to disrupt payments, but we're going to work with you and we're going to bring you volumes. And just getting that one person to take a bet on you, that was one big challenge, right? And then also the whole, talent acquisition thing, it totally resonates what Aki is saying. We started out, our office was in an apartment, actually, and then we moved to a really, really small house. So trying to get, again, this is not, Gojek wasn't as big and hot as it is today. Tokopedia and Grab. So the startup scene was not quite as vibrant. So trying to get people to join us, everyone's like, what is the startup game? What is fintech, right? So we're having actually a really fun story. One of our very first employees was a customer success person who was helping install our internet in our so-called office. So she was so good at helping us out and like troubleshooting. And we just said, hey, do you want to come work with us? And she's like, what is this? I'm like, hey, there's nothing to lose. Why don't you try it out? And she happened to be like, all right, let's take a chance. And that was a really fun startup story for the books there.
Excellent. I mean, and in your commentary, I mean, I think there's a lot of resilience that also comes with that. I mean, to really, again, go to different banks and to really have such a strong and crisp value proposition and pitch, to have them actually, as you said, take a bet on you and on your vision, I think is also certainly something to take away. And Stuart, on the Hula side, how have you been thinking about this?
Yeah, absolutely. I think there's a number of different elements, both personal and sort of company-wide. I think in terms of the trying to sort of build a company. I mean, building a company in itself is difficult at the best of times. Trying to do it in fintech offers a layer of complexity. Trying to sort of do that in sort of countries across Asia, I think there's a lot of fun involved. I mean, personally, I'm perhaps a little bit further down my career. It's not easy to try and sort of reconfigure your life to move into a point where you're not getting any revenue coming in or income, and to try and sort of do that, especially in sort of Singapore, which is not the cheapest of places to live. So that was sort of quite an interesting challenge, and obviously sort of working through visa challenges and the hustle that sort of came around that. Obviously sort of planning, I think we've alluded to compliance, I think was probably one of the big things. It was the biggest investment we made right at the very beginning, and making sure that we were absolutely on top of that. In the end of the day, I think fintech is dealing with people's money, and you have to make sure that you've got that sort of compliance box ticked, not just for for yourself, but for the regulatory bodies, but also for the people that you're dealing with as well, to build that trust. Because ultimately, again, when you're dealing with people's money, it is trust that you have to have, from a brand and a process operational perspective. There's probably elements that we've already sort of covered with everybody else, but people, culture, we put a lot of focus on the culture piece right at the very beginning. We all sat down at the beginning and said, right, this is what this is gonna mean to us. And perhaps a startup story like Tessa, we also similar. I remember sort of sitting around a table, and we all agreed that we wanted to right the wrongs of working in a big corporate company. I think that was sort of the big agreement that we had. We don't need to go down that sort of same path again. We can actually recreate or create something that we want to be a part of, as opposed to perhaps sort of something that someone else has done. I think, Aki, you alluded to capital. My goodness me, that was sort of challenging, both in terms of investment, but also in our business, the requirement for capital for the actual business model itself. It's like a chicken or egg situation. No one's going to lend you anything, and ultimately you need that capital to go and provide the service. How are you going to get to that? Some careful conversations with friends and family probably helped solve that one at the very beginning, and fortunately we were able to pay them all back in time as well. So that sort of helped us there. But I think the biggest thing for me, and this actually maintains today, and it's actually one of our core mentalities and values in our business, is that of the hustle. I used that word earlier on. For us, what does it mean? It's that sort of just the ability to go and get stuff done, work together, get sorted out, have that mentality where we're going to solve a problem, we've got to try and solve it. This is the real positive mentality, I think, to doing that. And above all, I think that has helped us grow the business. And I think that mentality, and I think that's why it still exists as one of the critical things that we look for in people joining Hula today.
Excellent. Makes a lot of sense, and particularly I think that hustle, that mentality, that kind of growth mindset is critical, particularly as companies that are born in Southeast Asia don't just serve Southeast Asia. I mean, so many fintech platforms and companies these days born in the region are truly global platforms, right? And when you touch on things like compliance, a lot of the folks that we work with at Stripe, they're eager to get into Europe, and then you run into things like SCA as an example, right? So how do you actually navigate that? So yeah. Fully appreciate your comments on that. So it's one thing to essentially build a product, to identify the gaps. I mean, there's an entirely separate, I guess, set of challenges when it comes to scaling that product. And I was perusing the site, Aki, and you mentioned that you're live in everywhere except Antarctica, which maybe this is a year, who knows? But tell us a little bit about how have you kind of gone about scaling Bamboo? Like what's been the most challenging part of scaling, and how, say, even tech infrastructure partners like AWS helped?
We started the business with the focus that we would be sort of Southeast Asia's leading, B2B wealth tech. We never intended to do anything outside of Southeast Asia. And I think we were just opportunistic. So it turned out that we started getting, client inbound requests from like Mexico and America and Middle East and Europe. And we just said like, why not? You know what I mean? Because if you can do a few countries in Southeast Asia, you've already accounted for the fact that the regulations are going to be different, right? You're going to have to deal with other counterparties like broker dealers and custodians, et cetera. So we're like, well, it's not like we're experts in, Thai, brokerage rules. And so, it's ultimately, because we're a B2B company, it's our clients who are the regulated entity. So we're ultimately just kind of building the tech that they need, the plumbing that they need to, digitize their business. So we went after it. And I think that's put us on an interesting course because most of our competitors, or you might say like fellow fintechs, even in the B2B side, they tend to focus on either individual countries or then well-defined regions. There's not many small global players that I know. So it's kind of a weird approach, but it's worked for us. I think the main trade-off probably from like a technical point of view is that I think of scalability, which you could think of as things like multi-tenancy and kind of self-service capabilities. So like those are technically like pretty doable, but the challenge is sort of doing that while maintaining some degree of flexibility, because if you're doing SMEs, you can probably afford not to have lots of scalability, but we're trying to serve also enterprise. That's where most of our revenues come from now, sort of like big banks and wealth managers. And they require a lot of flexibility in the architecture. They might say, we can't do this sort of authentication method because we've standardized something here, or we can't do this because of X, Y, Z. And, we would like to do this instead of that. And you have to sort of do these swaps to cater for, especially I think integrations. That's always the tough part. So that's I think the trick. I'm not going to say that we've totally kind of nailed it. I think we've, as I said, kind of understood how to scale up to some degree on the enterprise side, but we're now looking towards scaling down, you might say, going down market into the really self-service pure SaaS kind of stuff. And that's where we've been working with AWS in their kind of SaaS factory program where they've supported us. And I think a lot of it is like, not just technical things. Again, we knew how to build like multi-tenant architecture. A lot of it, I think, has to do with best practice in fintech of like operating in a software as a service mode, right? It's not just like, you could say like, oh, the tech is one part, but then you have to have a scalable market opportunity. Then you have to have a scalable business model. And then you have to have a scalable operating model, which includes a lot of the sort of boring things which you don't really want to think about when we're like thinking of exciting, let's make this a unicorn type of stuff. You don't often think of like customer support and metering and these kind of things. And I think that's a lot of what we've then had to sort of like learn our way through to discover. And I think it's been great to get a lot of references and best practice from AWS as we've sort of been figuring it out. So it's been helpful.
So much richness in your commentary, and truly you see that multifaceted, multi-functional aspect of really building and scaling a business. I mean, the operational side that has to resonate with the technical side, that has to resonate with the GTM side. So, again, certainly appreciated a lot of the comments there. And folks, again, a reminder: if you do have questions, feel free to pop them in the Zoom chat, and we'll get to them in a few minutes or so. Tessa, same question to you. I mean, when we think about scale, like you mentioned at the start, Zenit went through a bit of a business model pivot, P2P, and then has gradually grown and shifted. How have you kind of tackled scale and again worked with partners to actually help streamline that?
Yeah, a really good question there. So in terms of payments, obviously the payment world is about uptime, whether it's when we've been a wallet or now that we're a payment player for B2B, online payment acceptance, right? So in terms of our partner, obviously AWS has been a really fantastic partner for us. We store most of our data there. Aside from payment processing, which obviously, as you know, by regulation need to be done on soil Indonesia. we do store a lot of our information in AWS. So having this partner who's used to serving bigger players, having a plug and play product that we can use in different markets, especially now that we've expanded to the Philippines, has been, super duper fantastic, right? It means that we're not going to have any downtime issues because of these partners. We can focus really on what we're really good at, which is, providing all sorts of different payment options for our merchants. And we don't have to worry about the infra side for us. Yeah.
Excellent. And Stuart, I mean, I know Hula is now in, of course, multiple markets. I'd love it if you could tell us a little bit about when you realized it was time to scale Hula, and if you could give one piece of advice for folks who might not necessarily have scaled into multiple markets before, what they should be thinking about.
Yeah, absolutely. Listen, first and foremost, I think our strategy was always to have that sort of pan-region, sort of scaling strategy for the business. I mean, I think Aki alluded to their strategy at the very beginning. That was always part of ours as well, in terms of creating that that sort of value across the region. As I said, that's how we inherently sort of built the technology platform that we have in the core of our business today. So I think that was always the intention, and we probably took some really good I think advice or guidance perhaps from companies like Klarna, for example, where they were sort of scaling that sort of proposition, albeit across a more homogenous sort of market like Europe, but growing that, I think that brand across those multiple markets was quite sort of valuable, valuable to them, and so that was really important for us. I think so. Secondly, we started to see some strong merchant demand as well. There were merchants of saying, listen, I love this in Singapore, customers love it. Please bring us into Malaysia. I think it's going to really help us there. And all of a sudden, Malaysia turned into Thailand, turned into Hong Kong, turned into Philippines, and go, hang on a minute, we're coming with you. We're trying to sort of ride that horse as quickly as possible with you. But it's great, I think, when you've got that demand from a merchant perspective, rather than sort of building and hoping they will come. It gives a very simple, perhaps investment or return on investment sort of thesis to your to that sort of plan. And I think probably thirdly, the customer product fit. I think we moved quite quickly, I think, in terms of that sort of product fit. We saw that early demand, we saw that growth. We saw, we made a couple of mistakes along the way, or at least, we listened to that sort of feedback from consumers. And I think by virtue that we moved pretty quickly to get to sort of change that, those sort of core fundamentals in the business, that I think helped us to get to a satisfactory place where we felt confident, that all those three things I think were in place. And probably the bit of advice, that I'd give, and maybe it's sort of controversial, to a degree, but I often hear from a lot of people, expanding too quickly, you're going to spread your resources, et cetera, run out of money. And I think that there's some, obviously it's a very valid bit of feedback, from people, but you're running your business, that business better than anybody else, right? You have that sort of data, you have that gut feeling around what works and what doesn't. And I remember reading an article a few years ago, and it sort of looked at the different unicorns across Asia, and all of them had expanded really quickly into new markets. And the reason why I think they had expanded into new markets, one, was, very much, I think, around the ability and opportunity to that drive that sort of brand awareness, that consumer awareness, that merchant awareness, whatever their sort of customers were. But also, secondly, that learning that you get from moving into a new market, it helps your core market and helps, I think, you learn even quicker to, perhaps further refine that sort of product fit. And I'll be honest with you, that has really helped us, significantly as I look at what we've done in Thailand, look what we've learned in Malaysia, in relative terms to, to sort of Singapore. And so my advice is actually to, perhaps is again controversial, but go with your guts and actually, perhaps, fight back about sort of some of those people that are providing that advice, because I think in this region, it's super important, and you learn way more in terms of the value that it brings to your business.
Very well said. So we're running out of time before we move into live Q&A. So I'm just going to ask you all one final question before we again pause and take live questions from the audience. And I think when we think about who's on today's call. I think we have a number of startup founders that are here with us and varying points in the journey of building their company. And so at a personal level, when you look back at your journey to date, what's been, I guess, the experience like for you personally? And I guess kind of building on the last question that I asked you, Stuart, but zoning out a little bit more, just what's one piece of kind of general advice or one tip that you would leave fintech founders with, or early operators with, particularly as they start this year? So kind of two-part question, bit of your kind of personal reflections on the journey, but then again, that final piece of more general advice. And I guess we can start with Tessa.
Yeah, great. So for me, what's the experience been like? I thought I knew what fast pace was like when I was working in investing. Having a startup that's growing exponentially, it feels like being pulled, you're clinging on into a really fast moving train, right? At any point in time, it's always extremely uncomfortable. You're always going to be facing new challenges. There have been a lot of fires, a lot of issues we have to deal with that I've always been like, wow, I really did not see that one coming. So, there's always a surprise there. When you think you've seen everything, suddenly, obviously the pandemic came around, for example. How many startup founders before our time could really say that hey, we've survived through the pandemic with our startup, right? So I think if there was really good firm advice from me to other founders would be find yourself some really strong partners, some other co-founders. To me, I think I've been really lucky. The other three co-founders, we have, really good personalities. We complement one another, right? And we both really share that same framework. So when push comes to shove, when we have a bunch of fires to deal with, we're not there pointing fingers, but we really do work together to deal with these things. So I think finding the right partner in this journey is super duper important. And I think the other thing that I've learned, especially through COVID, is take that time for yourself as well. Take a break, because when you're really burnt out, I think your company is really going to suffer with you as well, right? You need to be there, but you need to know your limits. At some point in time, I get to my limits when I'm like, guys, I need to switch off for a little bit so I can come back refreshed. And again, being very lucky, having a lot of good, a really strong team. They have said, I understand, Tessa, you take your time and then come back refreshed and we can tackle this together. So yeah, my two advice there.
Well said. I mean, particularly on that second point, I mean, the companies that you all are building, and I guess so many of the folks on this call, in theory, are companies that are being built for the decades. And so it is a marathon. And so it's certainly important to take time to invest in yourselves and hit pause when necessary so you can certainly run faster over the long term. Aki, closing remarks, thoughts?
Yeah. So I got into fintech from a pretty different perspective than I think most people within fintech. Obviously a lot of people used to work for banks or different sort of, you might say, legacy players. Could be tech companies, the sort of old crew of tech companies, and they've sort of branched out and said, hey, we can do certain things better. I didn't actually have a background in finance at all, and I got into this thing from just kind of a personal reason, having sold my house in Europe, and I was like, what should I do with my money? And I really was quite shocked to find a lack of options and how everything was quite expensive. So I sort of got into fintech with a view that we should be adding value and helping consumers like myself out. I was basically trying to help myself out indirectly, and I've been pretty disillusioned, I would say, over the past 5 years with how strong a lack of purpose there is within the community. But I think there's a hope ahead, which is like, if you look at what's just been happening with Wall Street Bets and GameStop, I think there's honestly an opportunity for like an ethical fintech beyond just like inclusion, which is oftentimes means the people need more payments, more credit kind of facilities, which is true to an extent, but there's kind of a limit to that. I think there has to be sort of a next level of, okay, we've put basic infrastructure in place, which sort of enables the economy and whatnot. But then it's like, surely there's something beyond that. And it's not just about like more buying stuff and more kind of, consumerism, spreading consumerism around the world. So I'm looking forward to that, and hopefully, I don't know, like find more people that are starting to think that way, and doing some good. That's kind of what I'm looking forward to.
Excellent. So it's really moving away from this more kind of transactional, like you said, lay the infrastructure and then consumerism, but more that transformational values-based kind of growth of the sector. Absolutely makes sense. And certainly last but not least, Stuart, parting words.
Yeah, I mean, but from a journey perspective, I think if you're alluding to that, it's been fantastic. I think the best job I've ever had, first and foremost. It's quite interesting the number of people that come in from an interview perspective, and I think they find that, working for a startup business, if we use that sort of terminology, is quite romantic in a way. You get to have this sort of autonomy and you sort of get to sort of do lots of different things. But I think the reality is it's quite different in a lot of ways. And I think that there's a reality that we try to sort of make that come alive. I mean, I can honestly say I think the word roller coaster is probably the word that I would use to describe at least my own personal experience of massive highs and massive lows, and huge sacrifice. And I sort of allude to the hustle word again, because there are so many stories. I think we could probably spend another 2 hours. I'm sure the Tessa and Aki have the same experience as well, of these moments where literally sort of sliding door moments where if this hadn't happened, we probably wouldn't be here today, kind of experiences. But listen, I think again, the advice from my perspective, I think you've got to be ready, I think, and to appreciate that it's going to be a lot of sacrifice, that it's going to be a lot of hard work. I think that it's never a right time to do anything. You just, if you've got that right idea, you've got the right motivation, you've questioned yourself, I think, in that way, you're passionate about the opportunity. And Aki, I think what he was just alluding to there, you can sort of see the passion, I think, that comes through from his perspective about what he wants to achieve. I think they all have to be in mind, because if you're going to do that hard work, you're going to have those highs and lows, you're going to have that hustle and that and those sacrifices. You've got to have all of that in play, because you've got to have that inherent motivation to sort of to keep picking yourself up by the ground. I think we used the word resilience earlier on. I think that's probably a good place to start, because I think that or finish perhaps, because that is definitely what you need in sort of large buckets of.
Excellent. Again, very well said. So we've spoken about a number of topics so far in today's discussion. We've touched on everything from regulation to hiring to finding the right partners, both from a technical standpoint, but even co-founders, early employees, resilience, hustle, values, kind of base growth of the sector. And so now I think we're going to hit pause and actually see what's on the minds of the audience. So we're just going to hit pause, and then we're going to come back and take some live audience questions.